What up, crypto world? My name is Chris Garcia, aka Crypto Godson. Today, I'll be going over this book right here, An Altcoin Trader's Handbook by Nick Patel. I highly recommend this book. If I were to pick any one book that impacted me the most with respect to crypto investing, I would recommend this book. There are several other books that have, of course, impacted me, my mindset, my psychology, my trading strategies, several other books. But if I were to pick one, I think this is the most important book that you need to read if you're trying to invest in the altcoin space like myself. There are other books that I highly recommend, like for one, if you want to get into trading, one thing that I did not know before I got into trading was that psychology was, like, honestly, it's like 90% of the game. It's like 10% trading strategy and I guess, numbers and kind of the logical part of it, like what do I do when this happens or this XYZ happens. But if you're trying to get into trading, psychology is like 90% of the whole game. And I think Trading in the Zone by Mark Douglas is probably the other book, which I will do a review on. And it's on my list. I haven't gotten to it yet, but this is what I want to do first because I think it's more important that you learn the nuances and what makes altcoin trading different, like way different than any other market, like Forex, which a lot of people are familiar with. Also, the stock market, options trading, any other type of trading. Honestly, it's way different in the altcoin space. And this guy, Nick Patel, does a great job of explaining his experiences since he got in, since I believe 2014, obviously, until the present moment. And he does a great job of breaking down his experiences. But not only that, he approaches it like a manual as well in certain sections of the book. So you can literally just read like I do. I highlighted certain sections and I go back to it all the time. And it's sort of like a checklist to make sure that I'm checking for the right things. And of course, this any book for that matter is a reference. You're not supposed to use any book like a textbook. So it's more so like take from it what you can, take from it what you're comfortable with, and use it to your advantage to obviously enhance your trading approach, trading strategies, your trading psychology. So salute to Nick Patel for writing this book. This book was actually published in 2018. It is now 2021. There are several things that are outdated and need to be updated, but this book still has tons of value. So that's why I'm still posting this video, even though, it's due for a refresh. But a lot of the core concepts are still the same. Just like any great book, the concepts and sort of the methodology and the intent is timeless. So I think it's very important that I share this information with you guys. I have highlighted this book. I read this back in fall 2018. This was released in, I believe, summer 2018. Don't quote me on that, but it was released obviously I think around Q2 of 2018. I read this in fall 2018, and I've gone back to it over and over and over again. I've learned so much from my trading approach, from my trading experiences, and this book just proves time and time again that, like, obviously Nick Patel wrote this book because he got to a certain point in his trading success that he felt it was important to share it. Um, I also will go over some great things that he's doing. He provides a free coin report, which he does fundamental and technical analysis and shares his analysis on certain coins for free on basically a weekly basis. And then he also provides a premium content section where you can pay. I actually am subscribed to it. I believe it's like $5 a month or something. It's really cheap. Whatever it is, $5, $10 a month. It's really cheap. I recommend you guys sign up for that. Of course, I recommend buying the book. It's only $18 for the hard copy on Amazon. I'll put all these links below. He has a free email list that he sends these coin reports out on, as well as the free market outlooks on. So week to week, you can get, kind of his perspective on the market. And of course, you definitely want to sign up, not sign up, but subscribe and follow him on Twitter just to keep up to date with what he's doing. Because in my perspective, he is the only person that has written the altcoin trader's handbook or anything related to altcoin trading. Like, there's tons of books on stock markets. There's tons of books on Bitcoin for that matter. But as far as like investing in the wild west of crypto, which is the altcoin space, and what now people kind of dig into DeFi. There's nothing in DeFi yet because this is 2018. There was no DeFi. But anyways, long story short, what I'm trying to say is there's no other book out there that focuses on the niche that is the altcoin market. And this is the only book, and I believe he's the only one for a reason. Like he's that good. He did this back in 2018, and he probably could have dropped at least two more editions since then. Probably a 2019 and maybe a 2020 version. And that's because, the market space is moving so fast. But even still, regardless, if there's no update, there's no new DeFi narratives published in here. There's no new institutional approach on here. The landscape has changed greatly. But even though he hasn't updated, I highly advise you read this book still, because you can learn so much. It's going to provide so much value regardless of when it was published. Just like any book, just like I said, just like, like the greatest books like Think and Grow Rich, like it was written so long ago, but it still has value and relevance today because the core concepts are timeless. So I highly recommend this book, not only because it's probably the only book you can find on any altcoin, and it's probably the only book you can find in the altcoin niche for that matter, but it is a great book on top of that. So like I said, I recommend you guys read Trading in the Zone by Mark Douglas. This book is basically highly focused on the psychological part of trading, and I highly recommend this one. This one goes for 19, so recommend this one as well. And then there are other books, but I think those are the top two that you want to focus on. This one and this one. So basically what I'm going to do is run through this book and look at my highlights and just drop some bars. He had, hella one-liners in here that I think could impact anybody and change your perspective and probably help you in the current market right now. It is June 26, 2021 right now. There's a lot of uncertainty and fear in the market and, in some people's eyes. Whereas I, due to reading books like this and Trading in the Zone, I see nothing but pure opportunity. I'm buying everything I can. And it's only because I have, resources like this to guide my thinking whenever I, get any type of uncertainty in my mind. So I'm going to stop right now, and then I'm just going to drop some bars, and then comment below which one impacted you the most. So like which bar, which page, which concept, which one impacted you the most, because maybe I can drop a video and we can go more in depth on that particular concept. Like I said, he released a memoir which he goes through his experiences, basically all of his trading strategies, his trading failures, what he learned through all of his his trades, and the failures, when he lost money, when he made money. And also he has a basically a filtering process. He goes through how he looks at fundamentals, he goes through how he looks at technicals. He was a short-term trader at first, and he kind of talks through how he switched to more of a fundamental analysis based trader. Like, you have to evaluate both, like the chart and the fundamentals, which is evaluating the developers, the team, the community, the supply emission, and then also the charts. Because you can, there can be a great company out there, but it means nothing. I mean, it's not a good opportunity if it's at all-time highs. You have to factor in both. So, yep, you got to keep all that in mind. I can just jump right to the nitty-gritty, right to the meat. So in chapter 5, he maps out his process. So first step is research. Second step is accumulation. So you're researching the coins, then you accumulate the coins, and then obviously you distribute. But for each of these processes, he maps out the steps. So I'm going to read through these. So first, he uses coin market cap. I personally use CoinGecko, and then he maps out the coins that are, he basically filters out between 100K and 1 million market cap. And then he filters for volume. The volume has to be over $1,000 for that day. So he filters that. Then he clicks through all of those. And then basically he batches those. And then you filter through those. So you're going to have to basically, once you have that list, that's when you go look at the fundamentals of those projects that are left standing. And then he does the same thing for the gap between 0 and 100K market cap, and then 1 million and 10 million market cap. So that's 3 filters. You got the gap between 0, 100K, 100K to 1 mil, 1 mil to 10 mil. And then you, from there, he makes sure that, like I just said, the volume's over 1,000, and then you filter through that list, and then also from there you got to go look at where these are offered. So you want to make sure they're on a credible exchange so that you're comfortable buying that. These days you don't really have to worry about that because most of them are on Uniswap. So if you have a Ledger or MetaMask, you're pretty much good to go regardless. Most, like I said, most coins are on Uniswap. He lists on here one exchange I used to use, Cryptopia. He lists KuCoin. I actually still use KuCoin, so that's a good thing to think about. KuCoin. Make sure that they're on at least, these days credible exchanges can be Coinbase, KuCoin, what's it, Binance, I guess you could say, and then Gate.io probably is another good one. And then that's the further research list. So that's like a first filter, but then you got to go look at the coin supply. So coins with less than 6 digits, so less than 100,000, or greater than 9 digits, so greater than, basically over a billion, he doesn't mess with. If the supply is over a billion or less than 100,000, he weeds them out. And then he also goes to look at Bitcoin talk. I don't know how relevant that is these days. Maybe these days you could look at Reddit, Telegram, and Telegram groups, probably just the Reddit group and the Telegram group, and then also check their GitHub, and then you can also obviously check their Twitter community, how popping is their Twitter community, and then the cash tag, like for RSR, if you put the $ RSR, search that, see what pops up, see how recent the posts are, see how much engagement is on those posts. That's another filter, And the more you do the things, the more comfortable you get, because it all becomes relative, and you understand like what this project is getting versus this project. So it's all relative at the end of the day when I'm talking about any of this. And then he also looks at the block reward structure, if there's any pre-mine information. Also, basically, was there any coins minted to the founding members or founding team before it was available to the public? That kind of is a short synopsis of a pre-mine. And then, or was it a fair launch? Fair launch means the project was launched, and once it was launched, the coins were available to the public at the same time that they were available to the core team. So I guess you can say that's a fair launch. Also, calculate the emission rate. So how many coins are being, released into the public every day or over a year versus how much the supply currently is. Because if all the coins are already released, that's great. There's no more tokens going to ever be released into the world. Or they could be like at the very beginning, like the circulating supply could be at 1 billion, but the total possible supply is 100 billion. So you have a lot of, I guess, increase in supply to go. So that's kind of something you want to watch out for. And then also you want to look at how the team plans on releasing those tokens. Is there an unlock date for the core team? Or is there just a flat rate? Or do they have halvings, kind of like Bitcoin? Those are things you want to look at. And I'm breezing through this because I still highly encourage you guys to read this. I'm just want to make sure I'm providing value here. Next, so he looks at the community, look at the community and social presence. So like I said, Telegram, Twitter, kind of jumped the gun on that one. So yeah, Twitter is a good place to go, and the Telegram group is a good place to go. See the numbers, like how many followers does the page have, how much engagement is the page getting, the cash tag, how much engagement is that getting on Twitter. And then also, how big is the Telegram group? How many members are in there? Is the conversation in there? Like, is it useful? Is it essential knowledge they're sharing? Or are they just, BSing on there? You gotta, what I'm saying? Go in there and just get a taste. Check the temperature. Next, the final step in this research is check the block explorer. So you can actually go on Etherscan and check the holders, and you can look at like the top 1,000 holders, and you can basically go in there and check, are they accumulating, are they distributing, are they selling? And actually I can go to, I'll do that. So basically, yeah, you can go look and see, are people buying or selling based on the rich list. You can Google Block Explorer, you can Google rich list with your project name after on Google, and it should pop up. Or you can use Etherscan if it's an ERC20 token, and you can go to that token and look at the top holders and just analyze what they're doing. And that's a very methodical approach. I don't do that too much, but something I could use. I don't use it too much, but Twitter sentiment can kind of steer you astray. Even though we do use Twitter to kind of gauge the strength of a community, during downtimes and up times, it can kind of steer you, kind of like watching the news. Like it's you can watch it to stay informed, but outside of 5-10 minutes just to get the gist of it, you're really starting to influence your emotions, and you don't want to do that too much. So I'm gonna add that. That's just a quick note. Next, accumulation. So I'm actually reading it right now. You see all my highlights. All right. So accumulation is the next step. Main thing you want to keep in mind when you're accumulating is everything is relative. So certain opportunities for certain projects may be better than others based on the current market cap and fundamental strength, fundamental catalysts. Like, is the team releasing anything soon? Do they have any upcoming marketing updates coming soon? Are they, tweeting a lot? Are they not tweeting a lot? Are they kind of just working behind the scenes? And are they communicating a lot? And then you want to look at the technicals. Next is technical. So you want to look at the long-term supports. Is the price sitting on a long-term support, or is it approaching a long-term resistance? So if it's at that long-term support, that's obviously more ideal. You want to accumulate in depression, sell in euphoria at the top. These accumulation ranges at the bottom are ideal. Nick said, I only ever buy during periods of anger or depression. So that's actually right now. This is a local support we're at right now, a yearly support for a lot of coins right now during the last week of June of 2021. So, you want to start evaluating, certain other indicators. It may be a volume indicator to check, where things are going. It's the underlying fundamentals. You can start lining up limit orders. And then, let's see, he says, oh yeah, in some small coins, you may be forced to micro buy because you can set, certain small orders, because if you do buy a lot, you're basically going to impact price. Like you're basically a whale. Almost, the regular person that's working a 9 to 5 can be a whale when it's coming to, accumulating certain projects. Like, say if the market cap is under 100,000, you can only imagine if you throw $1,000 in that project, it may spike 50% just based on the lack of liquidity. So keep that in mind when you're buying lower, like, products that just released. I don't think we deal with that too much because we're pretty much in a bull run. There's a lot of liquidity almost everywhere, and almost everybody's jumping in these trash coins. So I mean, that's just a tangent. Let me stop talking. So distribution is the last part, and honestly, it is the most difficult part because this is where psychology comes into play. So what he does is set sell targets using Fibonacci extensions and long-term horizontal resistance levels based on the BTC chart and the USD chart based on where we are. He also used the rich list. He checks the most, basically the whales in those coins to see when they start selling. So he can do the same, because most likely if the whales start selling, price is gonna drop, because usually, the crypto space, they hold the majority. Like the top 100 holders may hold 90% of the liquidity in almost all the coins, just based on, that's just economics. So next, he likes to partially sell. That's a big thing. Partially sell, take partial profits along the way. So whether that's 10% at long-term resistances, monthly resistances, take 10% off at each resistance as it goes up, or 20%, 30%, whatever you're familiar with. And then he also sets alerts for whenever price starts approaching certain long-term supports and resistances. Use alerts in apps like Blockfolio is a good one you can use. I use CoinGecko. You can use Delta app. Blockfolio, Delta, CoinGecko all have ways that you can manage your portfolio manually and also set alerts. So highly recommend using those. And then let's see what else he says. Yeah, so that's pretty much it as far as that section. 99% of your time is going to be spent doing research on like what to accumulate, and the rest is like waiting for price to get in an accumulation zone for you to buy. because certain projects may have great fundamentals, but their price may be at a resistance. It may be going up, and that's not ideal, because what if you had, if you evaluate tons of projects, you're gonna have a list, you're gonna have a basket of assets that you like, but you have to put them through a filtering process to make sure that you're taking advantage of the best to make sure that you're taking advantage of the best opportunities available at any given time, because there's thousands of crypto projects, there's tons of great ones, and there's only going to be a few that make it. But the way that you reduce risk and set your risk and use risk management, in my perspective and in Nick's perspective, is to make sure that you accumulate only in depression or anger and accumulation zones right there at the bottom of the chart. So here's a good example of an accumulation zone. I have a quick zone right here, and this has been valid since literally a year. Like today is June 25th. It established a local bottom right here. Basically last year, June 25th, 2020 was right here, and it broke this level, and then it bounced off, and it came back basically a month later in July, in late July 2020. Then it came back, October of 2020. Then it came back in November of 2020. Then it came back in, Christmas, New Year's time, 2020. Almost tapped it at the end of February. It tapped it in May 2021. And now we're right back here in June, the late June 2021. So this is a year-long support. And this is literally what Nick Patel referenced as, horizontal, basically, horizontal supports and resistances, just lines. I use these zones. You can use a line using TradingView. Oh yeah, TradingView definitely is a resource that Nick, references. So I definitely recommend that. So this is textbook right here. What we look for, and also what you want to keep in mind is the market psychology of the market, because you want to pair psychology with fundamentals with technicals. That's what I get out of this book, and that's what I want to make sure I communicate today. So this is a chart that is referenced in this book, and it's very useful in all phases of the market. Right now, I currently think we're in a local depression, or a year-long depression. Certain projects like Bitcoin is basically at a 50% retracement, and most other projects are more than that, like down to 90% retracement. So right up here, we're at the top, 62. The very top was 64. We're literally half of that, 50% retracement. And that's local though, you know what I'm saying? So, we're literally waiting for a confirmation whether we're going to trade sideways, keep going sideways and go back up, or trade sideways and go down. But projects like this, they're literally talking about a 90% retracement, like RSR. So the top was literally at 11, basically almost 12 cents. Now we're at 2 cents. So we gotta go 5-6x from here to get to where we were. That's way different. That's a 80. What is that, 80? Yeah, that's basically over an 80% drop. That's basically an 80% drop. That's ballpark 80% drop right there. And Bitcoin's at 50% drop. So in my eye, this is a local bottom. And based on this, based on what I'm getting from Twitter, Telegram, everywhere, it's depression. Like, people are selling, people are just like copping out, like, I'm just gonna wait. Like, they don't believe, like, they're kind of giving in to the mining, the mining FUD that is coming out of China, that all the miners are moving out of China, and then also new Tether FUD that's coming into the market. All right, now I'm going to jump through and read some of these quotes that I highlighted that I really thought were, like, just useful and essential information. This is the one financial space in the world where you truly can begin with next to nothing and realize life-changing gains. I've seen it. I've seen people on Twitter do it. You can literally get 100x, 1000x, even 10,000x in some cases with some of these projects. So if we're talking numbers, that means if you can put up 10,000 in a certain project and that project does 100x, you can make $1 million. You know what I'm saying? So you dial that back. So you can put 1,000 in a project and they can do 100x, and you're talking about 100,000, and that's life changing money for a lot of people. 100,000, $1 million, and then even dialing that back again, $100 can do 100x, and that could be 10,000. All of these can be life changing money that can pay off some debt, that can pay off a car, that can purchase a car, that can it could be whatever your needs are. It can change your life, and so I'm really interested, obviously achieving those type of gains for me and my family, my parents, my wife. So I want to, do that for my kids. And this is one of the main things I want to share is the fact that, if you apply these concepts, it can truly change your life. And then another quote I really like: staying alive is the single hardest part of this game. So that's why it's important that, you don't get wrapped up in the Shiba, the Doge, all these, the ICP, the Titan. You got to make sure you're not just aping into coins just based on hype. And one thing to keep in mind about crypto is usually the projects that are the newest are the most risky. So you want to usually try to invest in coins that have some price history, so you can see, that there's consistent buyers at certain levels, and you want to buy at those levels. Just like, right here, like right here, we have a consistent year-long level. So like you want to get into coins that have, buy supports. Without a buy support, new coins can, basically you can achieve, 99% losses in less than 24 hours. And it's not out of the norm. It's not something that happens every other year. Like, it happens all the time. So and then one thing, please refrain from beginning your trading journey with money that you cannot afford to lose. Usually risk in this context is not like Forex, where you're making sure that your stop loss and your lot size is accounted for, so yeah, you can manage your risk. In this context of the altcoin trading market, that's usually you manage your risk through the amount that you put into a certain coin. So if you have $1,000, it's, from a risk management perspective, you don't want to put $1,000 in one project. You theoretically want to have 10 projects with $100 in each of those projects. So if one of those goes to zero, you already set your risk. Your risk in that moment was $100. You lost $100. That's only 10%. Like it's known. You set your worst case scenario for that one project going to zero. But if you put it all in one and that goes to zero, you're done. Staying in the game is the name of the game. So that's one way that, I kind of summarized some of the concepts he put in here in a very short way, but that's the concept he was trying to communicate. He also breaks down his perspective on how he breaks down his portfolio from high caps, mid caps, low caps, and then even micro caps. So the numbers have changed since this book, and I personally approach them differently. But theoretically speaking, you got projects that are below $100 million. I look at them as low caps. That's usually when I want to get my entries. And then you have the bulk of where crypto is, where the crypto projects are between 100 million and 1 billion market cap. That's where the bulk of the projects are, great projects. But some of those may sit there forever, and some may blast off to, high caps. And then you got basically 1 billion to 10 billion, where there's a lot of projects. And then above 10 billion, that's your, like, the blue chip of the blue chips. But 1 billion to 10 billion is basically your blue chips, your top 100 crypto projects. The first page of Coin Market Cap and CoinGecko, that's all your blue chippers, projects that are either they're ghost change and they're kind of riding off the hype of the marketing. And then there's other projects in that top 100 that are really doing something, that really have a real world use case that may become, part of, our daily lives across the globe. So the fundamental side is really why you have to pair, this market cap analysis with, like I said, the technicals, and then make sure that you make some sound decisions based on what you're seeing from the team, and the qualitative side of it, based on what you're seeing from the team, how they communicate, what they're doing, and their just pure integrity, their track record. So one very well-known quote he shared in here: buy when there's blood in the streets, even if the blood is your own. Smart money buys things when things seem the worst, and sells when all seems wonderful. You want to buy at long-term supports and accumulation zones. He actually I like how he actually has pictures of charts, so he's not just talking about stuff. He actually shows it. This is long-term support, so I don't really have to do that. You want to make sure you get into projects with the greatest potential of return with the smallest downside risk. The way you do that is buying on long-term supports like this. Like say if we were back here and I'm buying you right here, that's really not the best decision. It may be strong fundamentally, but if there's another project that you are bullish on fundamentally and it's sitting on a long-term support and I'm looking at it, I would rather buy it at a long-term support. There's several other projects that aren't at support that I do support fundamentally, but I'm not going to enter those unless they're right here. So that's what Nick, communicates through his book. Oh yeah, one thing that's very helpful as well. So he has a way of thinking. So if the volume for a particular date in a project is over 1% of the current market cap of that same project, that's looked at as bullish, and those are basically going to trend up. So that's one thing, and it might have changed since then based on relative numbers. Everything is relative. So if other projects are doing 5% and this project's only doing 2%, your new number may be 3%. Like it has to be over 3 for me to get in it. If I'm thinking about short-term trade, that's more for short-term traders though. I'm not really a short-term trader. Nick isn't either, but he used to be, so that's why he knows these things, and he still kind of is able to share those things through his books, obviously. So he also breaks down technical patterns like cup and handle or double top, head and shoulders. He covers like the basics of line drawing, just how to look at a chart, and a lot of it is just you have to learn. You have to do seat time. You have to sit in the chair, look at your computer, day after day, week after week, year over year, and that with time, you begin to have a trained eye, and you see certain patterns, and you start recognizing opportunities a lot. It's like you put on a new set of glasses. So that's how I think about technical analysis. I really want to get into that. One good resource for that is Baby Pips, and this is something that Nick Patel he recommends highly. There's a lot of free resources on here for you to kind of just get familiar. And don't use these like a textbook. Use them as a reference. I definitely recommend this site as well. I co-sign this one. And then you have Inner Circle Trader. This is a YouTuber that posts, not a YouTuber, but I think he was an institutional trader, and now he's basically sharing the game. And I have listened to him for hours on hours over the past few years. And he, like he says, I am the mentor of your mentor. Like he's a dog. He's a straight savage. You got to listen to him to really understand like how powerful. He's just like Nick. Like he provides free game. This is what you want to stick to. So, there's a lot of people out here selling courses and things like that. I bought courses before, but it's really not necessary if you have resources like the Inner Circle Trader posting videos pretty, often, and it's nothing but straight heat. And then you got babypips.com, nothing but free content. And then, of course, it's cost, but it's timeless value in purchasing books like this, the Altcoin Trader's Handbook and Trading in the Zone. I think you're set. And then outside of that, you just have to, you got to take your L's. You got to trade. You got to take some risks. You got to learn from them. That's how you learn the best in any market, in any, undertaking in any pursuit in life. You got to go for it. And once you pair the theoretical, the books, the reading, these websites with the practical knowledge with, what you actually learn for yourself and what you figure out is best for you, what you figure out is your edge. Like maybe you are more of a short-term trader. Maybe you are, into Forex more, but you, at least you have that baseline knowledge in crypto and you're able to, use that for whatever market you want to trade and how you want to trade and more options. Maybe you're just a buy and hold Bitcoin guy and you don't really like altcoins, but you did learn a thing or two from doing this in that particular phase in your life. And like I traded Forex for a few months, not months, but honestly on and off for like a few years. And then I also played in stocks a little bit, and I figured out this is my niche. I don't like to I learned a lot from when I traded actively, but now I trade more long term. I sort of swing based on fundamentals, I guess you could say. Just I actually my outlook I would say is probably a year at the most. I wouldn't say I'm holding this for 5 years, like the market changes so much. But anyways, I'm going on a tangent, and I just want to make sure I drop kind of the same information he's dropping in his book, but with my own twist on it, because I read this and I've also, practically experienced a lot of what he's saying in this book. And the first few chapters, I believe, is basically all of his experiences, and I gained a lot from it, but I really didn't gain a lot from it until I actually experienced it. So this book is really not valuable unless you're actually going to try to apply some of these concepts and trade and invest in altcoins, and get your feet wet, get your hands dirty, and take some L's, learn from them, and don't look back. You know what I'm saying? Don't repeat the same mistake. That's the hardest thing not to do. Greed is the hardest thing to overcome. Once you start making money in crypto, you got to start taking some partials, take 10% off the top, put in a USDC or put in Bitcoin, put on the side, and then start buying up altcoins when they're in accumulation zone. And then at the end of this clip, I'm going to drop a lot of recordings that I was able to find of Nick Patel interviewing with other people on YouTube that I thought were very useful. So if you do have anything that impacted you in this video, please comment that below, and we can just exchange ideas. Join the Telegram group below, subscribe, hit that bell. This Telegram group is probably the most useful, and if you do comment below, like I said, let me know what concept impacted you the most, and if you have read this, what section of this book impacted you the most as well. Without further ado, let's stay healthy and get wealthy.
I can definitely feel that those similar study patterns then come into what I'm doing at the moment with my sort of coin reports, which end up being 5,000-6,000 words long, similar to the lengthier essays that I would write at uni. And they take a good 12 to 15 hours to research and write. So I think you're probably onto something there. But I also don't think that it's just a factor of me having been at uni. I think anyone can put in that work. It's just whether they have the hours to do so. Most people work full-time jobs, and it's pretty difficult to put in 15 hours a week into a single coin's research. And if it takes you 2-3 weeks to do it, then it's probably not worth it, because everything's going to have changed in that 3 weeks.
So with the market outlook and the
24 months, making similar returns to those that I did. And I think it's just about finding the right projects at the right prices and just holding on.
What's your biggest tip for these guys? Because you've been through the cycles plenty of times. What's your biggest tip for,
My biggest tip is the one thing that is most underutilized, as I mentioned in the podcast, is that, use the rich list. We are in a space that people outside of which look at and probably think it's opaque, but it's so transparent when you're actually in the space. There are literal tools to monitor the movements of the largest holders, and you can then cross-examine that with price action on a chart, and you have nearly 100% chance of being correct on your thesis if you map those two things together. So just use that tool. No one does.
Nobody talks about this.
No one does it. Because it takes time, but no one does it.
It is a bit more work, but that's again where the money is made. Everyone always talks about, they throw the term out, follow smart money, be the smart money. You have the tools to watch what they're doing.
Yeah, it's not like trading forex.
Strategy and what kind of things you trade.
Absolutely. So back in 2014, 2015, a lot of what we were doing, primarily because the market cycles were significantly shorter, you'd have entire cycles play out in a weekend. It was very short term, and yet the gains were similar, if not greater. And then over time, as the market has matured, as the liquidity improves and volume improves, the market cycles get longer and longer, and it didn't really make sense to trade short term when I could see that my edge was in finding fundamentally sound projects, buying them at historical lows, and then holding them cyclically and selling them when everyone else is euphoric. And so that's what I did in 2017 and the start of 2018. And that's pretty much what I'm now looking to do moving forward into the next cycle, because I just think it makes more sense. I'm not the sort of person who likes to spend all my time in front of the screens. But when I do, I prefer trading short term in traditional markets anyway, because they're far more liquid. So that makes more sense for me. But, you know, in crypto specifically, I'm definitely long term and cyclical. I like to look at the fundamentals of a project, do a thorough analysis, and then I look at technicals. I won't invest in a project based on a chart alone, even if it's exceptional, just because I don't know whether that team has abandoned that project or anything of that sort. So I'll make sure I've done some sort of research into it, and then I'll also not buy a project based on fundamentals alone. I need to see that it's played out market cycles in the past, it's trading at historical support or lows, it's formed perhaps an accumulation range, you know, a contracted price range, and then I'll back up my thesis by looking at the coin's rich list, which I then do a thorough dissection of and look at the holdings of the largest addresses and how they change over time, so I can kind of monitor whether so-called smart money is accumulating at certain prices or distributing, and whether I should be doing the same.
Oh man, okay, so there's a
Of
yeah.
course, it's all well and good having everything in your roadmap.
Yeah, exactly. So, what are some of the things that you do so that you can research these projects and find projects to enter?
Sure. So a lot of it is metrics that are either, you know, common sense or that I've devised myself. So, you know, anyone can have a look on my blog and see my coin reports, which go through this fully. But I'm looking at liquidity within 10% of the current price in the order book, because that's far more useful for me to know than volume. And instead of volume, I'm looking at average volume over a historical period. I take 30 days. So you can go onto CoinMarketCap or CoinGecko or any of those screener websites, and they'll have the last 30 days of volume, and you'll be able to come up with averages based on that. That'll give you a clearer idea. And then, of course, you then need to go into the actual exchanges to see whether they're being wash traded or it's legitimate. So that's one part of it, is looking at those sort of metrics and kind of figuring out, is there significant demand at these prices? Is there oversupply, etc.? And then the next thing I'm looking at is the specification of the coin itself, because I won't invest or trade or speculate on a project that has significant inflation, because I've seen every single time, regardless of any fundamentals, your coin will die if it's got too much supply emission coming onto the market and not enough demand to meet it. So that's one critical area for me, is to make sure that block rewards are matching the demand at the time for the project, and ideally I want less than 10% annual inflation. So those are the two core things. And then, of course, there's all the qualitative things like the dev team and looking at their professionalism, or how decentralized the workload is across the community. Maybe they involve the community in all aspects of the project. Maybe it's a professional team with a business, like so I recently featured VIDT. VID is the the name of the business, and VIDT is the token, and they actually have a cash flowing business, so it's just a professional team who runs it. Whereas then you have stuff like Komodo, which is a huge project, but it's primarily community led. So it is very much subjective in those respects. So I tend to steer closer towards the quantitative stuff when I'm looking at fundamentals, and then use the other aspects like the development of the project, what it's achieved since its inception, and those sort of things. And then, of course, that's all backed up by the rich list.
Okay, so there was a lot to go over there, but I think